G'day YouTube, what's happening? It's been a while since we jumped on and made a quick video, but I thought with 2 weeks to the Ethereum merge, I thought I'd jump on and talk about the merge and why, in my opinion, it is not yet priced in and why it's going to be very hard to price it in pre the actual merge itself. So if we sort of have an overall look at what's happening when Ethereum goes from proof of work to proof of stake, people are currently not yet factoring in all the risks that are associated with the merge itself, right? So there's obviously things that could happen, software, issues in the code, issues in the actual transition itself, issues in usage, issues with the miners and things like that. And that's going to be the first reason why it's not priced in. Because anyone who's sitting on the sidelines with money is seeing that, and that is a risk for them. You know, this isn't a risk-free play. You know, this isn't a risk-free buy into the merge, and of course it will go up. It does carry risk. And I would think that people with sufficient amounts of capital who are going to move the price of ETH are going to be either waiting to post-merge, or you're going to be in now, but you'll be in smaller size than what you would be. So the thing around that as well is you have a lot of people out there at the moment very bullish on ETH, and we've seen that lately with the ETH price going from 1,000 up to 2,000, and then we saw it come back down. And so what that's also done is that's anyone who's traded that on leverage, everyone who's wanted to put the leverage merge trade on up in the upper echelon, you know, the 1,750 to 2,000, you know, when the market dipped back down to 1,400, they would have been quite underwater. So not only have you got, you know, the most obvious trade being to go long ETH, but now that that has kind of played out, you've actually got people who are in late who are probably getting squeezed and liquidated and things like that as well. And that's what we're seeing on the charts. I mean, if we just jump over to the ETH chart here, ever since we had that move to the downside here, where we hit 880, we had that triple bottom, bounced off it, and we've been trending up. But then we look at here recently, and you can see that we've had these periods where we've just had large spikes down. You know, it would have been over because we've consolidated so much before each move down. We've actually caught a lot of people out. So basically what's been happening in these sort of situations, and I'll chuck this on the hour chart here, is that when the market goes sideways without a real strong move, you get people from both sides putting on positions. You know, people getting out, people getting long. And when it's chopped in a range, you actually don't get that crazy move until it actually breaks out. So for example, here, when we were started to range around a bit and you saw these false breaks up and down, as soon as we broke below these lows, you actually had anyone who was long through here getting liquidated, and then you had the shorts piling in, and then that's where we get these overextended moves to the downside, for it to then run down to the lows, and then we actually see, you know, the later and later, you know, we get decent amounts of volume. Same thing happened in here. You know, you would have got people trying to fade this, and then as soon as it breaks lower, you then have, you know, the long stopping out, more shorts piling in, thinking it's going down to 1,000, and so on. And so you actually get those moves that we're sort of seeing at the moment, and people are getting quite caught out trying to trade this merge trade, thinking it's going to be basically free easy money, where the market's always going to swing that, you know, 10 to 25% range, because that's where you're going to start liquidating people who have between 4 and 10x leverage on their positions. So it's something to keep in mind, is that if you are trading these sort of positions going into something like this, it is going to be very news driven. You know, in one way, I was having a conversation with somebody about this the other day, and I was like, this is almost likened to like a non-farm payrolls, right? Like it's the same sort of thing. You know, how many people want to hold a big position into non-farm payrolls? Probably not a lot, especially when it has, you know, technical implications. Like, you got to think of it too, right? There's non-farm payrolls in the way of, you know, you could hold an underlying asset. Nothing's going to change with the underlying asset post or pre non-farm payrolls, right? But with ETH, I mean, something could happen. I mean, yes, it may only be like a 0.1% or 1% or whatever percent chance, right? I'm no developer, so I'm not an expert in that area, but I do believe that there's always a chance that something could go wrong. You know, we've seen all the test nets merge successfully, and that's okay. But I think from a capital allocation point of view, I still think that risk is too high. And so I'm not saying that, it's not going to go ahead. I'm a strong believer that it will go through mid-September and that everything will be fine. However, if you were to put $10 billion behind it, maybe you might not be in yet. And so that's my take. The other thing is too, at the moment, there's a lot of talk around the returns of ETH changing post-merge, right? Things like MEV boost coming online, the lower issuance. This is all going to drive the yields that you can get from staking ETH. The difficult thing though is that no one's actually seeing those yields right now. No one actually knows certain what those yields are. So for example, if you're somebody who wants to go in and put some sort of a delta neutral trade on with size, or you want to buy ETH now and run it long term, it's very, very hard for you to sort of say where your sort of risk profile lies with that sort of trade when you can't actually see what that yield's going to be. I do believe that post-merge, once we actually see these things come online and we see the staking rewards passed on to the stakers, and we're going to actually see more people see ETH as being, it's a 5, 7, 10, 12% yielding asset in its underlying currency of ETH. I think that's when you're going to start seeing the fundamental shift in the price of ETH to go along with that, as people then start to react to the yields that they're able to get on a very big asset. Because you look at Bitcoin, and Bitcoin doesn't really have any native ways for you to generate, strong yields outside of just, sometimes you can lend it on platforms and earn, but it's normally sub 1%. When we're talking about an asset like ETH, which has got more utility, that brings its own things with it, but when you can start to get, at the moment it's around 4%, but post-merge, if you start to get the 7 to 10% yields, that's going to be very attractive for more institutional side investors. And there's a lot of infrastructure that's been built that can facilitate this. But again, who wants to go and drop a lot of money, even if you're delta neutral in this trade and you're like, selling futures against your outright ETH exposure and catching that yield, it's very hard to want to put that trade on with size in case something happens, because you're exposed to the underlying asset, which is the physical ETH. And when that transitions to merge, a lot of people with a lot of cash don't actually understand those nuances and intricacies of it. And that's going to lead me into the next point, where what you're actually seeing is the underlying intricacies of the merge is, at the moment, in my opinion, currently understood by people in the ecosystem. And the best way to demonstrate that is to look at the ETH BTC ratio and the chart and where it's been trending. So you can actually see, from mid-July, we've been basically trending up, while the broad market has been pretty much going down, right? And so generally speaking, if we look at the broader market of crypto, out of all the assets, when the market's generally getting bearish, you're pretty much always seeing BTC losing less than every other market, right? BTC still may be down 20%, but everything else is down 50%. In this particular example, this is basically showing that ETH has actually performed better than BTC in this bearish environment. Now, what does that mean? That means that there's more support on the buy side as the market falls for ETH, and people are either rotating out of BTC and into ETH. And so if you're rotating out of BTC into ETH, you're already a crypto native individual. So you already probably have a better understanding of the merge, how it's priced, and you're probably using this as some form of, the merge trade could even be specifically right now related to the ETH BTC ratio, as opposed to ETH against USDC or USDT or against a stable coin. Because if you think about it, right now, these are the people who are going to have the most knowledge. And if you compare that to against USDT, for the USDT to really take off and go to 3,000-4,000, you're actually going to need external capital, in my opinion, to come in, or people to deploy a lot of stable coins through it to be able to move it in that way. And if you think about it, generally speaking, if people are going to bring in a lot of external stable coins into the market to put into ETH, they're people that aren't already in. They're probably people that don't have as much experience in it and probably don't want to carry that risk. And so that's why we're actually not seeing it being priced in. Now, some may argue against this. Now, one thing that I did want to actually cover was, what does it even mean by something being priced in, right? And you got to think it's more this whole idea about the market has currently reacted to all the available information, where right now, all the available information is like subject to. So because of that, we're actually not seeing it being priced in, because what actually are they pricing in? You know, like what actually people think it's going to happen. You know, I've seen people run a lot of, like, out of, you know, the circles that I sort of know, there's a lot of people who are still a bit like, I'm not, I'll see it when I believe it kind of thing. And I think that's what we're seeing in the market too. You know, there's been lots of, you know, I saw somebody did a survey and people not sure, or they think there might be a problem. Even if people think it might go through or will go through, which is where I stand, how do you know what sort of yield you're going to get? You know, how do you know how much this is going to go up? You know, right now we're in a macro environment where the market is, you know, sort of trending down with the broad markets. You know, there's a high correlation with the S&P at the moment. And we're sort of seeing that in this, right? And that's why right now the trade is in the ETH BTC, because it's crypto native against crypto native. It's people that understand it more. You're actually seeing pretty much every dip is getting very, very well supported for the buy side of this ratio. So this is where, in my opinion, the merge trade is currently happening until we get external capital, which won't be till post-merge. Now, you know, a lot of people will also say the whole idea of buy the rumor, sell the fact. Now, this is an interesting thing, because that would imply that people are already long and people are going to go sell into the merge. Now, if we remember back to Solana a couple of years ago had their token unlock, which is huge. They dumped it. They had a bunch of tokens released on the market and they got heavily bought up. In my opinion, I think this could be a similar situation where if it's a buy the rumor, sell the fact, the merge comes, the merge is successful, and you actually see the market dip. In my opinion, that could become good opportunities. You know what I mean? They could be great opportunities to be buying, just people unwinding, because people aren't then selling it because it's bad. People are just selling it to unwind that position. That's a totally different type of thing, because if people are just selling it, then who's going to sell after them? You know what I mean? It's not actually negative. So with that particular scenario, I don't think, if the market doesn't dump, I think you're going to see ETH power on to the upside. And you could see that happen quite aggressively too. So that's worth keeping in mind. It's worth keeping in mind the scenarios that could happen around the merge. You know, with ETH being the sort of asset that it's becoming, it's going to be very interesting post-merge. As soon as it sort of happens, if we don't actually get those follow-throughs with the selling, it's what everyone sort of expects, it's kind of like the obvious trade, then you're actually going to see people, you know, you may see a spike down on it, but then what you may see is it aggressively takes off. And so what that will actually do is end up basically leaving anyone who got out too early. You know, you just miss out on all the gains. And the obvious trade is almost to buy straight after the merge and then hold it, because it's less risk. You're going to have people FOMOing in and you're probably going to get a better price, because people are going to play this narrative of, you know, buy it already and then sell it into the merge. Where selling it into the merge could actually be, you know, from a risk point of view, could actually be the better trade. So that's sort of like how I'm looking at things, how I would be looking to play it. Let's have a look at what other notes that I had. I think that's basically it. I think we've pretty much covered most things here. If you do have any questions, comments, theories, or you think I'm completely wrong, drop it in the comments below. I'm super interested to just see other people's opinions. You know, you may be right. You know, I'm not going to sit here and say that my thesis is perfect. It's just my thesis. It's what I think. It's what I'm going to act upon. I have a belief that this is how it's going to play out, and I'm going to, you know, pretty much put risk on accordingly. You know, the people that are asking, is it going to be a great time to buy into it now? Well, obviously it depends on your holding time, you know what I mean? Like, you know, a lot of people out there are wanting to sort of buy at these levels now into the merge. And I think if you're holding for 5 years, it's fine. If you're looking just to hold into the merge now, you've just got to be careful that you may be offside and that you probably don't want to be selling it post-merge now. You probably want to be looking for it to take off and run. But, you know, come up with your own game plan. You know, there's a lot of ideas to this video today that you can use. But I really recommend planning. You know, anyone who's traded before, you know, I remember back in the non-farm payrolls trading days, you know, we'd always have a plan of the different scenarios, and I would recommend you doing the same. But have a plan on basically what will happen in terms of like whether it happens, doesn't happen, whether it gets postponed, and whether there's an error. You know, these are all totally different scenarios. And then also look at like what happens if it goes through and the price action is strong. What happens if the price action is bearish? Very, very important. I think you probably see a lot of people reacting on it. I think there'll be a lot of volatility around it, but I don't necessarily think that it's just going to be a nice, clean, easy trade. You know, I think the market will make you work for it, you know, to put you under pressure, and it's up to you to sort of manage your risk and not be frightened by a little bit of short-term volatility in the market, because that's probably what you're going to see. But overall, I'm bullish on the merge. I think there's a lot of people are bullish on the merge. I think even though the global macro environment is the way it is, I think the merge is at a sort of a good point that it potentially could, you know, turn some of the crypto market around a bit. I mean, if you actually look at the ETH BTC chart, one would almost say that, you know, this is, in my opinion, we could be up here. You know, we could be up at 0.1, 0.12. If this does go really strong and we see ETH basically move from, you know, 1500 to, you know, 3K, for example, right? And I think that's definitely doable without massive moves in BTC. You know, if you think about it, we've only got to go, what's that? 8 to 10, you know, like 25%, for us to go up to there, and we've got to go 50% to go here. So that's basically, you know, when you think of, for it to go from here to here, that's ETH moving 25% up and Bitcoin staying at the same price, ETH moving 50% up, and Bitcoin staying at the same price. And obviously they'll trek along somewhat together, but I definitely do think we'll see one be quite outperforming the other. And that's basically it. Like, subscribe, and yeah, let's come back to this video, which is being recorded on the 2nd of September 2022. Let's come back to this video in the future and analyze where we were right, where we were wrong, what we could have done better. I mean, it's not like this opportunity is going to happen again, unfortunately. This is one of the bigger opportunities that we've ever had in this sort of space. So it's going to present a lot of opportunity. So be ready, and good luck, and I'll see you guys all later.